Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you 5 major stories from the world of business. It's Friday, February 21st, 2025. This is Nelson John. Let's get started. Your daily cup of coffee is set to become more expensive. Global coffee prices have surged due to supply shortages in major producing countries like Brazil and Vietnam. Brazil faces its worst drought in over 4 decades, severely affecting coffee yields. Similarly, Vietnam has been hit by typhoons and erratic rainfall, disrupting harvests and lowering bean quality. These challenges have pushed Robusta futures to a record high of $5,849 per ton, with Arabica prices rising about 70% in 2024. In India, coffee consumption is steadily rising, making price hikes more impactful than ever, reports Sunira Tandon. Specialty coffee chains like Blue Tokai have already increased prices and may implement further hikes. Packaged coffee brands are also feeling the squeeze, with the Indian Coffee Roasters Association announcing a 200 rupees per kilo hike in powdered Arabica and Robusta. Major brands like Nestlé, which sells Nescafe, acknowledge the impact of skyrocketing coffee costs, with coffee prices up 75% year-on-year. While some chains try to avoid passing the burden on to consumers, the sustained rise in global coffee prices makes it challenging to absorb the increasing costs. As a result, your morning brew is likely to be a pricey one. Google is finalizing plans to open its first physical retail store outside of the US, targeting India as the launchpad. The tech giant is in advanced stages of selecting locations in New Delhi and Mumbai, with stores expecting to span approximately 15,000 square feet and potentially opening within 6 months. Now, this strategic move aims to emulate Apple's successful retail approach, enhancing Google's presence in India's premium smartphone market. Currently, Apple holds a 55% share of this segment, while Google's Pixel commands about 2%. By establishing these stores, Google seeks to provide direct consumer engagement and bolster its market position. The company has committed $10 billion to India's growth, underscoring the country's significance in its global strategy. While Bangalore was considered, the focus remains on New Delhi and Mumbai for the initial rollout. This development aligns with Google's broader efforts to expand its footprint in key international markets. From one tech giant to another, Microsoft has unveiled Majorana 1, a breakthrough quantum chip that could bring industrial-scale quantum computing within years, not decades. Built with an innovative material called a topoconductor, this chip is designed to scale to 1 million qubits on a single processor, potentially transforming computing as we know it. Unlike classic computers, which process information in binary, that's zeros and ones, quantum computers leverage qubits, which can exist in multiple states at once. This enables them to perform complex calculations, potentially faster, with potential applications in AI, financial modeling, drug discovery, and climate research. Microsoft's approach relies on Majorana's particles, a unique type of theoretical particle that could make quantum computing more stable and scalable. While tech giants like Google and IBM have also made strides in quantum computing, Microsoft's announcement signals that commercial quantum applications could be closer than anticipated. With this breakthrough, the race to harness quantum power is accelerating, bringing us one step closer to solving problems beyond the reach of today's computers. The Indian IT sector may finally be seeing a turnaround, thanks to the weakening rupee. The currency currently hit an all-time low of 87.57 against the US dollar, declining by 1.3% so far in 2025. While this spelled troubles for importers, IT firms, being major exporters, stand to gain as a weakening rupee boosts revenue and profit margins. Analysts at Jefferies highlighted companies like LTIMindtree, Wipro, Sagility India, and Coforge as key beneficiaries due to their high exposure to the dollar, euro, and pound. Jefferies has already raised its earnings estimates for IT stocks by 2 to 5%, predicting that they could once again outperform the broader Nifty index, as they've done in the previous periods of rupee depreciation. Beyond currency movements, there are other positive signs. US banks are ramping up technology spending, hitting a record $9.5 billion last quarter. Additionally, demand for AI and Gen AI-driven services is rising, with Indian IT firms actively investing in these areas. However, challenges remain. Uncertainty over US Fed rate cuts and potential trade tensions could impact recovery. While revenue growth is expected to pick up in FY26, valuations must stay reasonable as the sector navigates evolving global dynamics. Now, when switching a job, you probably focus on transferring or withdrawing your provident fund, assuming all your savings are covered. But what if a part of your money was still stuck, unclaimed, and inaccessible? That's what happened to Mr. A. While he was successfully withdrawing his PF, his employee pension scheme EPS contributions remained unmerged. Without linking past EPS accounts, his withdrawals requests were denied. Unlike PF, EPS doesn't transfer automatically. It requires an extra step that many employees overlook. Here's the rule. Employers contribute 8.33% of your salary to EPS. If you work with both private PF trusts and EPFO managed employers, your pension funds could be scattered. To withdraw or claim benefits, EPS must be transferred and merged. If you work for less than 10 years, you can withdraw your EPS, but only if it's properly linked. Cross the 10-year mark and withdrawal isn't an option. Instead, you'll need a pension scheme certificate to claim benefits and retirement. To avoid complications, always transfer EPS when changing jobs. Staying proactive ensures you do not lose your hard-earned pension savings. Read Aparajita Sharma's detailed report on this in today's Minced Money. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a great weekend.